Yo, Robin Lee, how are you, man? It's been, I think, easily 4 and a bit years since we had our last podcast, and it's a good catch up with you. And I just want to reference the fact that, we originally spoke back in the day when you were co-founding Hello Gold, and you had stints in the corporate world with the Securities Commission, and then I think you're also the CFO of the World Gold Council, right? So, how time flies when we're having fun, and here we are on this side of the equation. And I thought I'd catch up with you because a common friend has put us back in touch again. And the subject is, of course, retirement, because we've come to that demographic where, at some level, all of us are trying to figure out this whole thing about retirement and how we're going to deal with it and all the challenges inside. So I guess, Robin, our conversation today will revolve around how we're preparing for retirement and how are you thinking about it?
Well, first of all, Sushant, thanks for having me. Unlike you, I still have a full head of hair, so I can tell exactly how much I've aged. I would like to say this is a function of the anxiety through COVID, but it was more about the anxiety of shutting down Hello Gold when I shut down Hello Gold all those years ago. But on to retirement. I think I should have known better because I'm financially literate, relatively well educated. And I know that I should have, started saving for retirement at an early age and take advantage of compounded returns and all those things, but I didn't. So I'm kind of like most people around the world that I have saved not as much as I thought I would have for retirement. And, at some level, I guess I should also be panicking about the state I'm in because I'm now 57 going on 58. So, definitely should be retired. But really, I would have liked a little bit more in my bank account, but I don't. But it's okay. I've figured out a path forward. At least in my head, I have.
Okay, your answer is a lot more profound than one might think because it then comes down to the question of adequacy, right? And what might not work for you, at least in your mind, will be more than enough for someone who lives in, say, Taiping, for example, right? That's the first thing. And then the second thing is, what does retirement mean to you?
Well, well, I thought about this, after we agreed to have a chat about this challenge that we all face, and we will all face if we're not facing it already. And what's interesting is when retirement legislation first came out in America and the UK, way back when, right? The retirement age was 65, right? The average lifespan was 60 max, right? So in effect, people were working until they died. So there's no retirement, you know. But in the mid to late 20th century, retirement started moving down towards 55, and it stayed at 55. And conversely, life expectancy shot up to 80, 80 plus. So suddenly, at 55, you have 25 more years to go, and you have been conditioned to retire, right? We've all been told 55 you finish, you enjoy the fruits of your labor, and you go off and do all those things that you've always wanted to do. But historically, back in the early decades of the 20th century, at least based on what I've read, that was not the case. Retirement, according to legislation, was 65, but life expectancy was 60. So there was you could work until the end, until your last breath. So I think that needs to be borne in mind. Oftentimes when you talk to people about retirement as you work towards it, they very rarely ever talk about, do you have enough money or not? They actually say, what are you going to do? You got to keep yourself active. You got to keep your mind active, all these things. Otherwise, you'll deteriorate really, really fast. And, over the course of the last couple of years, I've spoken to folks that have retired, and they've always said, I wish I did this, I wish I did that, but I didn't. And now I feel, I need to get more active, etc. So I think those two things made me think about how you can think about retirement, even if you are not financially as well prepared as you might have liked. Making lemonade out of lemons is kind of my philosophy towards this. And it solves two things with one stone, right? You can solve the problem using your brains, which will keep your mind active and keep you out of hospital, and put that horsepower that you used, for the last 30 odd years to work to solving your financial challenges that you have. That's basically it in a nutshell. And, I can talk about some of the things I've been doing, some of the things that I would like to do, and some of the things I definitely don't want to do.
Well, the IGB co-founder, Dato Tan Chin Nam, he wrote a book before I passed away some years ago. And the title of the book was Don't Assume, because it makes an ass out of you and me. Well, so my assumption of you, Robin, is that because you have worked in very senior positions in the corporate world here in London and the UK and so on and so forth, you would have had a big salary, and, you've had big packages, CFO of the World Gold Council, big position. And of course, you did startup as well. And so, all those years when you made a lot of money, right? The assumption is that, I could be wrong, is that the assumption is when you make a lot of money in the working world, normally when you end work, you've got a decent enough pile, right?
Hmm.
So where is my assumption wrong?
Well, I think it's all relative. You always set yourself targets and expectations of where you'd be at certain points in time in your life. And certainly from that perspective, it's probably true to say that financially I'm not where I thought I would have been. But conversely, you're right. Compared to a lot of people, I'm very, very fortunate. So it's not really, it's not so much where you are financially in absolute terms, because everyone has different needs, different expectations, rightly or wrongly, right? The challenge is, given where you are and where you want to be, is there anything that you can do to change that? So, yes, you're absolutely right. What I have is a lot more than what many people will need. But on the other hand, what I have is not what I would have liked to have had, and I'm sure that's the same for everyone. So the question is not so much in absolute terms, do you have X, but what can you do to shift X to Y, if that makes sense?
Yeah. So again, another one of my assumptions is that, at least anecdotally, Robin, I've seen a lot of people in my peer groups. They tend to work the extra years. They tend to put away extra money in the fears that they will not be enough in the elder years. But then invariably, and I say invariably in a very loose way, when they eventually move on to the next part of their life and they shuffle off this mortal coil, there is a substantial amount of savings that they have left, whether it's land or whether it's cash or whether it's stocks. And so that represents to me the opportunity cost of life itself, because the extra years spent working, which you don't use, and we know that as the older you get, the less money you spend, right? That is the opportunity cost of living, the youth of your senior years, as it were, right? The coin of quoted phrase. So
Yes.
that, so in summation, I think a lot of people put too much put too much attention to putting too much money aside, which they never use. So it's wasted. Whereas they should just focus on living the best years of their senior life, and then in some sense dying with zero, because you can't take your money with you. You know what I mean, right? You know what I'm
Yeah.
trying to say?
I mean, look, I don't think working full time, effectively, what you say, working full time, after 55 for as long as you want, is necessarily wrong. I mean, everyone has a different set of expectations, and also everyone has something different that gets them out of bed in the morning, right? Some people want to prolong their working life, and absolutely fantastic, right? If it keeps them happier, then that's fine. On the other hand, other people don't. I think what's really important at the ripe old age of 50 something is that you have a very honest conversation with yourself as to what really makes you happy, as for what fears drives you, right? I mean, it may end up in the same place, but ultimately you want to say, I can work. Is that going to make me happy or not? If it does, fantastic. If making me happy means I have less things to worry about, and that's my definition of happiness, that's also perfectly valid. But if it doesn't, then actually do the things that make you happy, because you're right. And not everyone needs to earn as much as they would like to earn. But I understand the fear. I mean, I have chosen, rightly or wrongly, and I'll know in the fullness of time, not to go back into a full-time gig. I do various things throughout the working week, but I'm not sitting in the office, right? And I think that's important for me, given what I want, which is to enjoy life, to stay healthy, because I think if you're healthy physically and mentally, then you can enjoy your senior years. Whereas if you're mentally healthy but you're physically not healthy, as we all know, a lot of Malaysians are not that healthy, then you're not going to enjoy your senior years. I've made a conscious decision to go down the path that I've gone down. Doesn't necessarily mean that it is free from worry. I just have prioritized the things that I want, and I've figured out, given these trade-offs I've made, what do I need to do to optimize my path forward? Does that
Okay,
make
so
sense, or is it really kind of subliminal?
that sounds like something that McKinsey would have written in a 500-page report. So let's try and distill that, right, Robin? So, three things that you would advise people to do when it comes to thinking about retirement. Let's just assume that the person is 35 or 40 years old, right? They've got under 20 years of working life. And so the three things that they should think about at this age, number one. And secondly, I think the three things that to not do to avoid, also for someone of the same age, 35. Three things to do and three things to avoid.
Well, I think if you're like in your early 40s, so first of all, I mean, if you're a professional or you're working corporate, you're in peak earning time of your life. You really want to maximize that. If financial concerns are your priority, right? Because you've got kids, your mortgages, all that kind of stuff to think about. But ultimately, whether you're 30, 40, or 50, what makes you happy? Within the constraint of whatever responsibilities you have. If you're single, you have no responsibilities, then actually really just do what makes you happy. If you have responsibilities, discharge them responsibly, and then beyond that, what makes you happy. And for some people I know, climbing up the corporate ladder is fundamentally important. Others is maximizing their bank account. Others is to try and find a farm. Whether you're 40, 50, or whatever, start now, because frankly, you don't know what's going to happen tomorrow. So it's never too early to pursue your dreams. I mean, maybe that's my biggest problem. I fundamentally believe in that. But if you're like your stereotypical person, yes, maximize your value in your career, all those things. Pay down your debt to a manageable level. Yes, do put away all the savings to enjoy the compounded returns over the next 10 to 15 years, all the stuff that I'm sure they can read about everywhere, right? All the traditional stuff, and you can get all that, but still, if all that makes you unhappy for 10 years, you're storing up 10 years of mental unhappiness, which will come back and bite you in the ass when you're 55. Which comes back to my original point is that ultimately, responsibilities aside, do what makes you happy. You really got to have that honest conversation. If the job doesn't make you happy, then get another job. If you want to scratch that entrepreneurial itch, try not to do what I did. But beyond that, go for it.
I just want to ring fence what you talked about paying down your debts, right? And of course, there's debt and then there's debts, right? So bad debt would be, for example, credit card debt, 18% a year, impecunious, you can go to jail. But then you've got like mortgage debt. And mortgage debt is like kind of like really, really nice debt to have because it's low interest, it's long term, you can pay off little bits and pieces. And then you can use it kind of like a loan facility. And I know a lot of people who don't pay down their mortgage debt because they use it as pools of capital to invest in. So, for example, if you're paying 4.5% for your mortgage loan, and you can get, let's just say for argument's sake, Maybank gives you a dividend and it's yielding 7% a year. You got to make 2.5% close eyes, right? Without taking much risk at all because it's Maybank. Well, what do
Yes.
you think about the whole issue about not paying down debt?
No, for sure. I mean, you got to look at it from a purely financial perspective. Having leverage in of itself, whether it's credit card or whatever, is not bad, right? The principle of it all. So if you're paying 15%, 20% a year, but you're generating 50% per year. I mean, the principle that you say that a lot of people say about mortgages versus putting money in some Maybank account and generating a higher interest, that applies to credit card too. If you can find those investment opportunities, the challenge is if you don't, then what do? I mean, if you don't, then you pay down the debt because otherwise you're just throwing money away. So it really does depend on where you are in terms of opportunities that are available to you, and also making sure that you understand the difference between investing and just gambling, right? Because when I was working full time, I did not have the time to really think about what I was investing in. So I didn't bother. I just gave it to my pension guy, my wealth manager to do. I did not make any decisions. I just outsourced all that stuff because I'd rather spend time with my family. That was far more important to me than eking out the extra X dollars on whatever I had left, right? So the question is, if you have that time available to you to actually make informed decisions about investing, fantastic. I know from my perspective, I didn't. I chose to spend that with my kids and my family and all, enjoying life because I was working like a dog doing whatever I was doing in the office. I didn't want to go home and look at spreadsheets.
So, if you were to allocate some capital towards investing today, right, Robin, what kind of things are you looking at? What would you look at?
Well, that's the other thing that that I realized now in my situation, that I've had to turn some of what I had always thought would be the situation for my portfolio at this point in time, which is that typically you have a much more aggressive portfolio when you're young, and as you get older, you make that portfolio a lot more conservative, right? Because you want to earn steady income, you want to take less risk, and all that kind of stuff. But given that I need to make my money really work for itself, I have decided that I'm going to take more risk with my portfolio rather than less risk. So first thing I did about a year, 2 years ago was actually tell my wealth manager I'm changing it to be a lot more aggressive in terms of the portfolio decisions I want him to make. And then secondly, because I'm no longer working, I decided to actually stop pick myself, right? I rarely ever in my entire working life bought shares over the, I don't know, what, 30, 40 years. I just, always bought funds or invested through a wealth manager. But this time I decided to kind of do like a own mini kind of hedge fund and identify 10 stocks that I would like to hold regardless of whether through the course of a cycle. So I wasn't speculating, and I was betting on them to improve in value over the course of the next few years, until Trump got inaugurated. Then I got scared. I liquidated everything.
There's so much to talk about. So basically, I think the vast majority of people don't invest. They rely on their salary to get them through, and I think they rely on EPF to be
Mm.
the like bastion of savings. For the minority, and again, this is just purely speculation, right? And anecdotal. Then for the minority of people who do invest, the vast majority of those who do invest, they actually outsource it to some kind of like
Mm.
wealth manager or to some unit trust or some person who is basically mandated with giving them a kind of return. Would you think that's a good idea, or would you be against that idea?
Well, it depends on who you are, right? And also how confident you are in your ability to invest. Like I said, you're 55. You've stepped off from working 9 to 5, Monday to Friday, and then probably a few hours on the weekends, every day, to 0 hours, right? What are you going to do with those hours? I mean, literally, what are you going to do? So let's assume that you're your average intelligent person. You're relatively successful. You don't even have to be financially educated. You have 25 years left in your life. You're only at school for like 10 years. You have a lot of time to educate yourself. And then, frankly, there's no excuse now, right? Because you have everything on YouTube, digital influencers. Just make sure you choose the right ones. Choose you, to understand all these things. And then you learn, and then you experiment. And don't even have to experiment with real money. You can experiment by doing dummy portfolio, right? And then when you feel more confident, then you put a little bit in, and if you're more confident, you put a bit more in. I mean, for me, I'm not. I mean, I'll give you a flavor of one of the shares I invested in. In China, in Asia, I invested in TSMC. I invested in Xiaomi. I invested in BYD. In America, I invested in Nvidia, KKR, and I can't remember one other thing, right? But all those. Oh, I also invested in GLD, because all those are gone now because I'm like scared, apart from GLD. But because I have time. So I actually had time to go and assess these shares and make decisions and all that kind of stuff. And it's not that it wasn't scary. Of course it's scary, because I've never done it before. It's not like this is money that when you're working, you lose $10,000. Next month, you've got $10,000 coming in. It's not a problem. When you stop working, you lose $10,000. You're not getting $10,000 back. I mean, you are, in hedge fund parlance, you doubling up to, you got to make $20,000 back now. I mean, depending on where you are in terms of your own assessment of your ability, even you're zero, you can start off by learning, because again, I come back to the point, what are you doing in your spare time? You have a lot of spare time. When you're working, you're time poor. Now you are time rich. There's only so much time you can spend in the gym. If you're that way inclined, there's only so much time I think you can spend eating if you want to stay healthy. There's so much time you can spend sleeping. You have a lot of spare time, and I know exactly how much time I spend. So you can constructively build up your education in this area, and then experiment with dummy portfolio, real portfolio with I don't know, 5,000 ringgit, whatever it is, right? And then build up from there. And if it doesn't work for you, fine. So yes, I would say it's not everyone is comfortable with doing it themselves, and fine, if they really don't feel comfortable, then don't. But to those who feel comfortable but have never started, and actually you have all the time in the world. And apart from anything, this is stimulating your brain, particularly if you've never done it before. This is all new shit.
Exactly. Okay, so let me just deep dive on that, because just to get into how you're thinking about this, right? I'm gonna choose three stocks from the ones that you mentioned and get you to just quickly explain the investment thesis behind it, so that at least people get some relatability now. Okay, so why TSMC, why KKR, and why gold?
TSMC, because this is, everyone is like buying NVIDIA, and I bought NVIDIA. And I was thinking, it reminds me of a book I read called The Victorian Internet, which was about and this is real. In the old days, before the telegraphic poles, where you could send messages through wire, right? And it basically said all these companies, telegram companies, sprouted up, and died. But the ones that made money were the picks and shovels, right? TSMC was my picks and shovels for the AI boom, right? So and generally in life, in terms of chip manufacturing and all that kind of stuff. So I was pretty comfortable with TSMC. With KKR, there was a lot of money going to tech, and I felt I was right. I knew I was riding the momentum of tech, but I wanted something that was investing in a broad base of business, but I knew it had solid management. And KK has a hugely successful track record. So I bought that. I was proxying into PE buyouts and all that kind of stuff through them. And gold, because, ultimately I'm a scaredy cat. I feel that if all else failed, gold will prop me up. So that's the one thing I still hold. Yeah, so that's why gold.
So if you like gold, what about the digital equivalent of gold? Would you look at that?
I have those stuff too.
Say it, Robin. Say it. Say it. What's his name?
Yes, I am long Bitcoin and Ether. I mean, look, but I have a so the way a lot of people over the last few years have asked me, how do you invest in these things and what do I think? I said, well, regardless of what I think, there is momentum, right? And for as long as there's momentum, you ride the momentum. And the way I'd say to someone is like, and this is not, everyone has money that they throw away, right? Put it in the lottery. They'll go on a Friday night to the pub and they'll drink or whatever it is. Pissing money is what I call it, right? So whatever that is, 100 ringgit, 100 US dollars, $1,000, whatever that throwaway money is, put that in Bitcoin and Ether, whichever one, right? Every month, first day of the month. So regardless of whether it's up or down, just buy it, right? Remember, it's money you can afford to lose, because literally this is money that you would ordinarily piss away, right? So instead of pissing away outside the pub, you're pissing away in some Luno account or whatever it is. Right? And if it goes to zero, which I think is very unlikely nowadays, but if it drops to zero, it's still money they've pissed away, right? Now, over 12 months, 2 years, 3 years, whatever, it's basically 36 times whatever. It's still pissing away money. And if it goes up, happy days. If it doesn't, what's the big deal? And if you want to, then that was my first version. And the second version was what I call the bold strategy, which is your Bitcoin gold strategy. And that was basically saying, if you wanted to be a bit more grown up about managing a crypto portfolio, is that you put 25% for every dollar you put into Bitcoin or Ether, you put $3 into gold, and every year you just rebalance. So you just keep on keeping the 1 to 3 ratio.
I should also preface this past 5-minute discussion by saying this is not financial advice, and this is by in no way, shape, or form the recommendation to buy any of those names aforementioned by Robin or myself.
No, this is what I do.
Your goals are your goals are your goals, and other people's goals are their goals, right? So TSMC, this is interesting to me because you and I have an opinion on Trump, and Trump is what? Newly minted, something like 7 weeks in the hot seat, and he's making all kinds of statements about, the Suez Canal, Greenland, and it seems that nothing is beyond the narrative. Like it could be a lot of bluster, right? But what happens if Taiwan comes into focus and the dreaded, conflict happens in Taiwan? What happens then? How do you look at your investments then?
Well, in that sense, I think I guess we're going into politics now. I'm more optimistic that won't happen under the Trump administration than it might have done under a Kamala administration. So I feel a lot more relaxed about a TSMC investment with Trump as president than I would have done with Kamala as president.
Yeah, the Democrats were demonstrably more militarily focused than the Republicans and Trump is. Trump seems to be very anti-war, at least in his actions the last administration as well.
Yeah, well, yeah, actually, my view of I have a much simpler view of Trump and why he's good in the case of TSMC and Taiwan. It's the way it's what I call the parent-child syndrome. When a parent says to a child, and when the child asks the parent something, and the parent says maybe, in the parent's head is a no, in the child's head is a yes, right? And so you're saying that the same word has been said, but different people have different interpretation of what that word means. Under Kamala presidency, anything that the Americans could have said to Taiwan would have been interpreted in a positive way. Do you have our backs? Maybe. That's a yes. Whereas the Americans probably said, not really, but we have to say maybe. We can't say no, we're going to say maybe. If Trump says maybe, or even when Trump says yes, they're going to say, but do you really? I mean, do you really have my back? Or are you going to have my back and then suddenly give us a huge bill and say, give us $10 billion? And then we are blackmailed into giving you $10 billion? So I feel that because of who he is and what he's shown over the last 7 to 8 weeks, anyone that wants to position themselves more aggressively and dependent on the US will be less likely to do so because they're just not sure where they stand.
I agree. I agree. And perhaps you could just spend the last 5 or 10 minutes of our time, Robin, because I mean, the last time we chatted on, at least formally on a web podcast, was when you were Hello Gold founder, right? And I think one of the questions I asked you at the time was, startups are for young people and this energy. And then I think your reply to me was, statistically at least, there's a good chance that, capital would back people of experience, right? Because they built a network, they built experience, they made some mistakes, they know which way is up and which way is down. Obviously, since then, Hello Gold has gone where it's gone, right? So, what are the learnings you've made from running the startup? How would you advise people in the startup scene how to navigate this weird world based on what you learned with Hello Gold?
I mean, I think I still stand by that. I think, you can. The odds and the statistics show that if the older you are, the more likely it will ultimately succeed. I think there are a lot of lessons that can be learned from the model that we were trying to deploy that are specific to us. Everything takes a lot longer than you always had anticipated or had hoped for. I think that was one of our biggest challenges. And I think one of the things that actually someone just said to me 2 weeks ago when I was talking to him about some work potentially in America was that they felt that Hello Gold was ahead of its time, or as I basically said to them, well, maybe we just need a different CEO. But I do think that the proposition is still valid, and somewhere someone will make it work. Just maybe with different set of capabilities and leadership.
Yeah, I actually agree with you because Malaysia is so far behind the States, and oftentimes business models are just too advanced for the region. I mean, you look at the IPOs in Malaysia now, right? They're still like, as you say, the picks and shovels, the pipe makers, the equipment guys and traditional manufacturing. You're not seeing much high tech. And even the startup scene in terms of the funding, the capital raising, they're still like quite antiquated, So,
Well,
I mean, it's unfortunate, but this is where the
and there's nothing wrong with that. People need picks and shovels, right? And I think I was reading something about us spending a ton of money on getting ARM Holdings to come into Malaysia. Kind of reminds me of this situation where, what is our inherent advantage in a highly competitive space to go into this kind of arena? Malaysia has inherent advantages where they are less competitive, and we should exploit those and scale those things up and get really, really good at it so we can defend that space. And going to something brand new where there's no inherent strength, I think it's yes, potentially could work, but there are easier bets out there. Yeah, and that's what we should focus on.
investment, Robin. I have it on reasonably good authority that the headline number seems a bit misleading because actually the 1.3 billion odd dollars, I think the vast majority of that spend was actually to be committed by the Malaysian government, not by arm itself. And the only way to strong arm into coming to Malaysia was to underwrite most of the cost itself because they wanted the technology transfer, they wanted to to launch into AI and right. It is what it is. And Malaysia's what 4 years old behind the US in terms of innovation and market development, and even demographically, Malaysia is so small, 32 million people, very fragmented, very uneven by way of incomes categories, and it's a tough call. So I mean, this whole startup scene, I don't know, man. How would you advise the startup guy looking to raise capital to start a new business? How would you advise them to navigate that?
Well,
Those
I think
benefits.
well, there are two different issues, right? One is what can Malaysia Inc. realistically do and should focus on to create in sectoral clusters to enable startups to thrive. And I really do believe we need to figure out the things that we're really, really good at or can be really, really good at and not try to go into areas where, ultimately, we are competing against much bigger boys. And we've seen this in so many different other sectors. We've tried this arm strategy before in different ways, right? I mean, it's all ended up in the same outbox. As an entrepreneur, I think as a tech entrepreneur, go knock yourself over. You want to build something that no one else has done. I think absolutely pursue your dreams. The whole point being a startup entrepreneur is that you're pursuing your dreams. If you're trying to do this to make money, then there's a good chance you're going to be fundamentally unhappy and disappointed because most startups fail. And I'm not saying this because I'm bitter. It's just statistically that is true. So pursue your dreams, and you never know, it could work, right? And fantastic. Then you can build a whole new cluster sector in Malaysia. The only thing from a financial perspective that I would suggest, given the constraints that Malaysia has, is get to cash flow break even really, really, really fast so that you're not dependent on fundraising. That's probably the only thing. But pursue your dreams, as crazy as they are.
And I'm assuming again the one big limitation to raising capital in Malaysia is the fact that capital isn't that strategic, nor is it that clued in as it is in not even in the US, Singapore or Australia or Hong Kong. The capital
Well,
here is risk averse. It is very narrow minded, I think, and quite secular, I think.
oh, that's a whole different conversation, and I'm getting into so much trouble with that.
I know. So you can either agree or disagree. That's all.
I completely agree. I mean, the when I was in the SC, I joined the SC in 1994. God, I'm old. And if someone to look back on the press releases of the SC and when it talked about the venture capital space there, and then look at the press release of the SC and the venture capital space today, they say, wow, nothing has changed. And you have to imagine that's what, 05, 15. If you can't build something in 30 years, it says a lot.
I think so. I think so. I think so. I mean, I did my .com. I mean, that my version of the .com in the late 90s, early 2000s, and it just seems to me that little has changed in terms of how capital views startups and just the risk profile, the time expectation, the expectations of founder and his team, her team. Very little has changed. Okay, I think in summation then, Robert, just close on retirement, and obviously you've got many, many more years to go because you're so, young, fit, and healthy. How are you taking this last quartile or third of your life in terms of, how you're approaching it?
Well, like I'm gonna enjoy it, right? I'm doing the things that I want to do, whether it is work related or non-work related. I am now know that the value of getting stressed out over work is just not worth it. So I don't want to do that. Would never say never, but I know in an ideal world, I want to have a balanced portfolio with my life between work and life balance. And I want to do that. I want to continue doing that. I think I can make a little bit of money. I can, more importantly, hopefully do a whole lot more good. I didn't succeed with Hollow Gold, but I'm hoping I can do it in some other way. And yeah, just stay healthy and enjoy life.
Thank you, man. That was really insightful and I think very honest, Robin. I shall see you on the tennis courts in person very
Yes,
soon.
and it'll be horrendous.
Take care, Robin. Thanks a lot.
Take care. Bye.
Bye.